point of sale transactions for XYZ consumer item. You're scanning a QR code or you're hitting send on a wallet that you've copied and put into your wallet, and you're sending $50 of Bitcoin to purchase, whatever item might be. Let's say it's a jersey or I don't know why I have sports on my mind. So like a soccer ball or jersey or something like that.
Sure.
Or maybe memorabilia, like a signed piece of memorabilia. At this juncture, are we seeing that those transactions are being obviously there is a movement of money. There is a gain or loss that should be reported on that transaction. In my world, we're thinking about okay, de minimis. We got to get this de minimis exemption because it decreases complexity on those kinds of transactions immeasurably, right?
Mm-hmm.
If the de minimis exemption is $200, like it is for foreign currencies, that'd be great. But what do you have any clients? And obviously, you can't say who they are, but maybe you can speak about them generally that do a lot of commerce in this space, and how are they working with their customers in these kinds of small transactions?
I don't have a lot of clients who kind of have issues with common day consumer transactions, and I think we're not seeing a whole lot of it, which is unfortunate.
Yeah,
because I
probably
think
because of this.
Yeah, because it's exactly because of that. I mean, you cannot make a purchase of any reasonable size without it having, because everything is reported on a schedule on your tax return, right? So every single transaction, and there's not very many lines on that. So you end up, if you are someone who's a day trader or you have just a normal, think of your credit. I get an annual credit card statement, right, every year of everything, and it has a nice pie chart on the front of everything I spend my money on. But right, think of all those transactions from a year. Imagine if you were trying to use cryptocurrency to make all those transactions. All of that would have to be appended to your tax return and a calculation made each time for what you made. And remember, right, like if you had bought one Bitcoin, well, $50 is not one Bitcoin. So now you have to have the basis for the entire Bitcoin, create a subset of that for the amount that you spend, and then be able to do it. And there are tax advantages to doing it very specific ways. Because you can spend whatever Bitcoin you want, ones that has a high basis or a low basis to minimize the gains, or use losses if you want. The problem is that it is kept the same way that stocks and securities are kept. And so it has all the same complexity of a financial transaction involving stocks and securities to buy a cup of coffee. Mm-hmm. And I think we absolutely, thankfully, there is federal legislation that's been proposed to try and get a de minimis exception to cryptocurrency so that it can be used in the marketplace. And hopefully we'll get something like that. I think politicians for a while there were focusing on some sort of sweeping legislation that would cover everything.
Yeah. That's just not feasible right now.
The UK tried it, and they thought they had something along those lines, sweeping legislation that way. And I mean, we had one very sweeping bill, but now I think they've broken into pieces, right? They're trying to do legislation to fix the broker definition. They're trying to do this one just for a de minimis exception. I think those have a greater likelihood of passing and will make commerce for the everyday consumer a lot easier. That way, if you do own Bitcoin, it's not just an investment. It can also be useful in commerce.